Hi everyone, let's cover my Elliott Wave scenarios on SUI on the daily time frame, starting with the bullish scenario where we're looking for a multi 1-2. So the first wave 1 was a very clear 5-wave impulsive structure, followed by a nice 3-wave corrective move down in a wave 2. Then the next leg towards the upside can be counted as a 5-wave impulsive structure as well. 1, 2, 1, 2, 3, 4, 5, 4, 5, finishing a second wave 1, looking for a 3-wave corrective structure down in a wave 2. Now what's nice is that price now touched the common target area for a wave 2 between the 0.5 and 0.786, sitting between 3.19 and 2.64, and preferably a wave 2 is finishing at least after the 0.382 fib time, taken from the start to the end of wave 1, which also is the case over here. Now inside this area though, there is a very interesting area of support, which is the golden pocket in combination with the weekly point of control at basically 2.90. So that is definitely an area of interest for me personally, and I'll be observing what price does there once it hits. You can see I also have an alarm on top of this level, so it's definitely an area of interest. And if price is moving to the downside, touches this level here, I'll be checking the reaction because I might be interested in taking a long. Now, with regards to the bearish scenario, we're looking for further downside, right? So in this particular case, we have a high over here, followed by a diagonal to the downside, 1, 2, 3, 4, 5-wave structure, 3-wave move to the upside, A, B, C, and then you're looking for continuation to the downside. Now, it has to be said that a diagonal, especially a leading diagonal, never really gets the highest probabilities, more so on a higher time frame, like a daily time frame, which we analyze right now, compared to a 5-minute, 3-minute, 50-minute time frame, where these can appear more often. So a leading diagonal here does lower the probabilities already for a bearish outcome. Probabilities generally are higher once you start counting a leading diagonal that whatever is happening here is a corrective structure or a multi 1-2. But a multi 1-2 here doesn't work anymore because of this move to the upside. So probabilities generally are higher that this structure to the downside is a corrective structure instead of a diagonal. But in a bearish scenario, you need to count a diagonal to the downside, really. And then this move to the upside is a wave A, B, C. After wave C, you finish your bigger B and you look for price to move towards the downside. Now that means that the first structure to the downside here then has to be counted as an impulse in a wave 1. This has to be a finished wave 2 by now because of time. If we take a fib time from the start to the end of 1, we toggle on all of the fib times, and you can see that currently price here is ranging after a 5 fib time. And if this wave 2 is not yet finished and should finish somewhere over here, you're going to reach a 6 fib time, and just very low probabilities that is the case. So preferably your wave 2 is already finished. And this movement to the downside is the beginning of a larger wave 3. It has to be said that if this is a wave 1 to the downside being an impulse, we then have to count a wave 1, 2, 3, 4, 5. Wave 1 is the longest wave, meaning an extended wave 1. And an extended wave 1 is the rarest impulse. It's of course by no means an invalidation, but according to Elliott Wave International and generally the impulses, the most common impulse is an extended wave 3. Then you have an extended wave 5, and only then do you get the extended wave 1 impulse. So it's just something to at least keep in mind. Now, generally, if we are looking for a large wave 3 to the downside, we don't really like to change the structure. You would have a wave 1, 2, maybe another wave 1, a diagonal here, another 2, and then eventually 1, 2s and continue down. So if you move above a 3.85, at least a multi 1-2 to the downside has lower probabilities. And the other option is a diagonal to the downside. So wave 1, wave 2, you get a 3, a 4, and a 5, and then you still look for a larger bounce towards the upside. So that is still bullish. Preferably then this low of the diagonal is going to be made on that area of support that I mentioned at about 2.90, which would be ideal. And then as price is moving to the upside, we just have to keep managing, keep observing, and see what price is doing. Because what we're looking for in a bullish scenario is price to touch support and then move to the upside impulsively. So touch support and then get 5-wave structures to the upside, 3-wave corrective moves, and then look for continuation. While in a bearish option, you're looking for 3-wave corrective structures to the upside, and then eventually price fails to hold support, and then we look for price to move to the downside. Now, all of the levels on my chart can be seen here, at least the relevant ones in the range over here. These are the volume levels on my chart. These are time frame horizontals here on my chart, and if I open them together, you can basically see like pockets of interest, I suppose. So here 2.90, 2.77 is an area. We have some resistance to the upside, as you can see as well, just above price, but yeah, it gives you a bit of an idea. And then we have the probabilities, and the probabilities are higher for the bulls at the moment. There's no real reason to give the bears the highest amount of probabilities, because this move to the downside is a higher probability corrective structure compared to counting a diagonal as a leading diagonal, which means a diagonal that starts something new after you move towards the upside. This would be counted as a leading diagonal. A leading diagonal never really has the highest probabilities, more so on the higher time frames, and probabilities in general are higher for a corrective structure or a multi-1-2, but the multi-1-2 doesn't work because of this move to the upside. It's invalidated. Increasing probabilities, this is corrective, not a diagonal, which therefore automatically decreases the probabilities for a bearish outcome where you're looking for a wave A, wave B, and a wave C. Even if price would move towards the downside further, then because of the very clear 5-wave move up here, maybe you create a larger 3-wave structure and then move up. In general, the probabilities are higher for the bulls. Unless you really start to take out that low, that would be a problem, but that's at 1.72 and currently we are at 3.31. So yeah, with the information that we have at the moment, there's no real reason to think the bears have higher probabilities on the higher time frame. Keeping an eye on the areas of support that I mentioned. I'll be observing the reaction there, see what we get. But yeah, hopefully you found this video helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the altcoin analysis playlist where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.